said something good about the CFO. I will now be bombarded by people who said, why can't you recognize a blah, blah, blah when you see one? At the same time, I mean, it's a cult stock. When I hear that satellite thing, I say, I don't know. I mean, I know some people who work for Tesla in that division. They're the smartest guys. They're the smartest kids of my friends, the parents. And like anyone who's smart wants to go Tesla, and just wants to work in that division.
Yeah. Amazing company. We'll see what their future is. Johnson Controls, the CEO on Squawk earlier today, he talked about companies getting busy, exploring options as we've expected for a while.
I have to admit, on page 198, I said of Get Rich Carefully, I said they should spin off that auto business. And, well, it took 2 years. It always makes me think, was there possibly an activist? Now, he point blank said no activists. This was just something they kind of woke up and said we have to do. I think you have to be careful with the rest of Johnson Controls because you're really getting a heating, ventilating, air conditioning company, HVAC, and it's not a first-rate HVAC. At the same time, it's the right thing to do for shareholders.
By the way, as we said, the JCI CEO was on Squawk earlier this morning. Here's a quick listen to what he said.
The most important thing to understand is that we have an incredible franchise business in the automotive business. But in order for us to become a multi-industrial, truly to be a multi-industrial, it's been clear, it's becoming more and more clear that we need to focus on the segments that are going to move us forward as a company and allow the automotive business to have the investments it needs to be successful.
Yeah, I mean, look, this is, again, part of what happens. The guy's been watching his stock. It's been, like, pain trying, and I think a lot of companies are feeling, we're not going to get the growth we want in the economy. Let's just do something. Let's just find value within our company. The only guys that have truly had a lot of growth are people connected with cellular, or people connected with natural foods. Right. And every other group is kind of just like, wow, you'd think that autos at an almost an $18 million run rate, they'd be making a lot of money. But the auto look at Ford, look at GM. Those stocks can't get out of their way.
Right. The list of winners this morning, it's the Transoceans of the world. We always said that 60 was some magic number on production. You think we're stabilizing here above 60? And if so, what happens now?
I think that the rate that we should have had this depletion, you'll see by the fourth quarter, we will start not pumping as much oil. Maybe Iran comes back in, but I didn't think the stocks should have been where they were. Even just last week, I got to tell you, they were almost all the major stocks I follow were back to where they were when oil was 47, 48. And that made no sense to me. These companies are capable of making a lot more money because they've lowered their costs rather dramatically. I find myself thinking that oil should be 60, 65.
60, 65.
Yeah, because if it's not going to go down on that 40-year production, it ain't going to go down. I mean, it's almost like maybe we get some number today, an inventory number, and it momentarily blip. But I think the demand side, China, we just got the Baltic freight numbers. China, they're up again last night. Maybe China's getting a tad stronger. That would be shocking, but it might.
We are looking for a draw again today when the inventories come out at 10:30. And by the way, crude's up 38% from the March lows. It's been quite a move.
The chemical companies are all moving because people feel like that they've had their margins have been cut and they've had to lower the prices, so now people like them. It would be interesting, really, Carl, it can't just be finance. So even oil as a leader, I'll take it.
You would take financials and energy.
Yeah, because there's so many, they came public with so many different companies in the oil patch. It's no longer just Exxon and Chevron. I mean, you hit up any company, it's like, oh, I see they're a midstream petroleum transfer company that also does propane that's sent to Canada. I mean, boy, did the bankers pump these stocks out. So they do color the tape.
Can that environment recreate itself in a higher rate world? I mean, a lot of this production was financed by
theoretically
minimal cost of capital.
Theoretically, no. I mean, we got to keep an eye on the bonds. But I look at this FXC, this euro, and it is just incredible. The euro's having a run here. People don't want to talk about it. The euro, the German bonds, I think, actually doing what they're doing, which is to go up in yield, is expressed natural. I think Europe is getting a little worried about inflation. This is going to make it so there's not going to be a lot of upward pressure on the dollar, which will really help a lot of our companies.
Speaking of which, Colgate, SocGen takes it to a hold. They had to sell. They say Brazil's still a big problem, but some of these headwinds they say are beginning to ease.
Yeah, and Colgate was the subject of takeover chatter. I don't think it's the case, but you'll see these analysts like yesterday with Diageo, where two guys go, and they've been right. Two guys go from a sell to a hold, because if there is takeover talk, David Faber was saying yesterday there could be fire. It would be hard for me to imagine that someone's trying to break up Colgate. But you know what? Procter, I mean, Procter's trying to sell a division that I thought was just the Rock of Gibraltar Procter. So anything's possible in this market, and that's what moving stocks are. Get busy living, get busy dying, companies doing things, or activists getting involved and saying companies doing things, and picking on companies that have not been able to make have great growth in their stocks lately.
Yeah.
By the way, utilities up, but that's because of a ruling that the utilities got that are going to allow them at price, because utilities should be going down given the way that rates are doing. So you got a confluence of rates going higher, utilities going higher, oil going higher, and finance going higher.
Absolutely.
I mean, that's an unholy trinity.
Yeah. Apple is right at the 50-day. We mentioned this piece in the New York Times. It's just out of color, but the fashion critic saying the headline is "Why I'm Breaking Up with the Apple Watch."
Jeez, I mean, that was a fast romance.
Yeah.
I mean, you got to give it a little time. I mean, look, I was 10 years in the making for my wedding, so I mean, Tim Cook should not necessarily take that as a sign of any sort of. That would not be the arbinger I hope that he gets. But give me a break. I mean, when do you see the different things that you have? I mean, this morning it was calling me master. I said, "What would you like, master?" I said, "You know what? How about some eggs?"
Netflix, this is again an all-time high, going back to the IPO, 661 now, Jim.
Well, I mean, the idea that Netflix has so many different options, I thought that it was brilliant to do this McChrystal movie with Brad Pitt. They put it in the movie theaters, they tease you, and then they take it back and you have to order it. I mean, I just find that they do things. I always, when I see a Netflix movie, say, other than the move about the disc where they go split the company, I always say, why didn't I think of that? Why didn't I think of that? I mean, when I've seen the Corrections Corp, I think Orange is the New Black. Now, that's a New York State prison. But I said, wow, that's good. And Caputo lives in my neighborhood. By the way, I see him. Trying to get him to come to Bar City Miguel. Caputo's in the neighborhood.
Really?
These are great characters, and if you haven't watched, I mean, someone tweeted me at Jim Cramer, of course, assassin alert, I'm attacked every minute. Here's a guy attacked me for, how can you like Netflix? Because they make ultra-liberal programming. Well, I like Netflix because the dramas that I see on Netflix, I don't see elsewhere. They're good.
Yeah.
And by the way, when you get some of these executives from TV off the desk, they Orange is the New Black and House of Cards.
Yeah, the content is winning, and now going into hotels.
Content's king. I'm waiting for Shake Shack to get into hotels.
Yeah, what is it? Is it Starwood or Hilton? I can't remember.
I can't get that done. It is killing me. What call do I have to make to get that done? I want room service, and I want a good burger and fries.
Shack, by the way, back to 75. Remember, it got above, 95 not too long ago.
Wow.
Yeah?
And it was a short squeeze up there.
Yeah.
Yep.
Yeah, difficult. I did see a report yesterday about Netflix and whether it could ever become the default search engine for video on the web.
Jeez, my daughter uses it as that.
Yeah.
Isn't that interesting?
Right.
I hadn't thought of that. I mean, I'll say, listen, I want a documentary about Stalingrad. She goes, I'll come right back to you. And boom, it'll be the British, it'll be it'll be BBC doing a thing about World War II. I mean, yes, the next generation. We got to think younger. I mean, for those who Pepsi, for those
it's hard to do. It's hard to do.
It really is.
Finally, just one last thing. You mentioned Regeneron. It is the biggest loser today,
right?
Along with Amgen and Lilly and Biogen.
Lilly shouldn't have been up so much yesterday. That was crazy. It was some diabetes, Pam. But Lilly has been the great performer in this group, even though you don't necessarily see the earnings momentum. I'm seeing a lot of stocks that people are talking about breaking up or doing things, starting to roll again. I mean, I see a Stanley Black & Decker going higher. That's really shouldn't be a breakup candidate, but that's working. The industrials are working today. This is a better day. And I can't come back to what you were saying yesterday, which is this market has a hard time staying down after a long time.
Yeah.
It is a bit of a coiled spring.
Yeah.
We're at a level where a lot of the technicians were saying it could hold, and if it could hold, we can get a bounce. It seems like today's action.
Chevron and Exxon leading the Dow up 102. Pisani's on the floor. Hey, Bob.
Yeah, and we've got a nice rally, and it's a fairly broad-based rally, Carl, but I want to concentrate on one sector in particular, and that's energy stocks, which have had a tough time of it recently, but oil is on the verge of breaking out. We're looking almost at a two-handle, 62 on oil. It's not quite there yet, but it's moving, and it's moving the big energy names, the usual suspects like Transocean, Chevron, Hess, Noble, Apache, Murphy. You get the point. They're all up 2 to 3% at this point, and that's what's helping the market overall. Chevron, of course, a big mover in the Dow. The other group I want to mention is interest rate sensitive, because even though 10-year yields are up again, I have pointed out for the last 2 weeks, these groups, the utilities, the telecoms, the REITs, and even emerging markets, that's the EEM on the bottom, have been under pressure as rates have been moving up. That is not happening happening today, so maybe we'll get a little bit of a bottom here. Most of these are at 10% correction levels already, along with the transports. We talked about that yesterday. Elsewhere, Chinese stocks, of course, we talked about this all day yesterday. MSCI decided to put off including mainland China in its indexing scheme. That was a disappointment to a lot of investors, but I think this is going to happen sooner than a lot of people think. Here are some of the ETFs that have mainland China shares in them. And I think the important thing is MSCI very specifically said there were a couple things they needed to resolve, and I think they can get resolved. First is this quota allocation system. Foreign investors still cannot buy these mainland China A shares the way they want to. There's a quota system. They want assurances that they're going to get all the stuff that they need to put in their indexes, and they want a system that's more streamlined. They'll also capital mobility restrictions. Remember, there's limits on the capital movement in China and limits on the amount of money that can be repatriated. They want to lift some of this uncertainty about that and make it easier to move money into and out of the country. Chinese officials want this to happen, so my impression is that they are likely to have some kind of agreement sometime this year, and there will be A shares included in these indexes sometime this year. They're not going to be dealing with this next year. The opening of the Shenzhen Hong Kong stock link is very important. I anticipate they will make this announcement in 2 to 3 weeks, and it will probably be functional somewhere around August or September. That will be like the Shanghai Hong Kong stock link. That will enable people to get a lot more A share stock and eliminate a lot of this uncertainty. Bottom line is this is definitely coming, just a little bit delayed. Another thing I want to mention is the secondary market. Take a look at Newmont. They had a big secondary offering overnight here. This was 29 million shares. That's roughly a 5% move for the company. They're adding about 5% of the shares. There's about 500 million shares outstanding right now. You see it trading to the downside. But this has been a huge year for secondaries. Once again, we're maybe not near records, but very close to it. Year to date, 465 secondaries. 2014, year to date, there was only 439 so far. Secondaries are big because a lot of companies think their assets are cheap, and they're using secondaries to acquire assets. That's what's going on with Newmont. They're acquiring mines from Anglo Ashanti using this secondary. So you're going to see more of this. I think these energy companies that have assets that are impaired, they're going to be issuing secondaries to buy up impaired assets of other energy companies. Look for more of this. Meantime, the IPO market's going in the other direction. I haven't gotten very excited about the IPO market at all this year because look what's going on. 71 IPOs year to date. There were 119 this time year to date last year. So the bottom line is there's more secondaries out there, but there's fewer IPOs. David Menlo at IPO Financial told me the reason there's fewer IPOs is the bar is a lot higher. Guys, you know, and you've been pointing out for a long time how many companies are now engaged in private financing for their companies, avoiding going public or at least delaying it. That sets the bar a lot higher for those companies when they finally do go public. Back to you guys. Spotify
reports of even more fundraising today. Thanks a lot, Bob. Yeah. Let's get to the bond pits today. What a story regarding Treasury specifically. Rick's at the CME. Hey, Rick.
Hi, Carl. And indeed, it isn't just Treasuries. Look at rates pretty much across the globe. Sovereigns of the best credit and sovereigns maybe of the lesser credit continue to move higher. Let's start at the beginning of the curve, shall we? A 2-year note. 5.5-month high yields, comping back to Christmas Eve, basically, of last year, as you see on the chart. Let's go to 5 years. And remember, here we are up 2 basis points on 5s, 10s, 30s, 177. But we closed at 174 on Friday for a 5-year. 8.5-month highs on pretty much everything, 5s, 10s, 30s, all the way out to boons, as you see on this chart starting in September. Let's look at 10-year. First, let's look at a 2-day so we can see how we really started to ratchet up on our path to 250. Maybe the biggest resistance is around 262. Open the chart up, also 8.5-month high yields, and you'll see that on this 10-year chart. We settle at 241 on Friday. Here we sit at 246. 311 is where we settle on Friday for a 30-year bond, also comping about 8.5 months, as you see this chart starting at the end of September. Let's look at boon yields. Same comp, September 24th, traded over 100 basis points today, over 1%, also 8.5-month high. As I said, the 8.5 is the wild number today. Let's look at foreign exchange, shall we? If we look at the euro versus the dollar, it's getting traction, but it certainly isn't on a drag strip at this point. Let's use basically a 1-month